The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Hi, everyone. Basil Chapman sitting in for Steve Rhodes. Steve is having a little trouble with his, I shouldn't say a little trouble, it's quite a lot of trouble that he's having with his software, with his data feed. So Dave White stepped in for the first hour. It's my pleasure to be able to step in here for the second hour. Thank you, Dave, for a great lead-in. And let's just run these numbers here. Let me just show you something quickly. This is the this is the E-mini. The E-mini is having a very strong leg A up in the Chapman wave. I'll explain that in a moment. In the 120-minute chart, it made the H pattern, tested it, went to a fractional new low. That's instead of 1732.25. The futures travel in 25-cent increments. Went down to 1732. Exactly, round number, and the MACD has been very strong. Histogram for the MACD, those are the little green vertical lines. Very good. It's trading at 2.24%. That's over the 0% line. And the stochastics at 85%. Question of the den, will I please look at NGD? Certainly will. Give me a moment here. I just need to finish a couple of things. So in the Chapman wave methodology, there are certain patterns we look for. One of the most important patterns is to identify a most obvious low bar. And from that low bar, as you see here, from the 1767 round number low, back on the 26th, I think it was 27th of January, at 1767, it ran up to a peak A, B, C, D. Now, peak, I label each successively higher peak, uppercase letter A, B, C, D, E, F. You can even go to a G. But really, 4 peaks is where you want to start being careful, because that's usually, if there is going to be a sharp turnaround, that's where you're going to look for it. And that's exactly what happened at 801.225, it pulled back to 1768.50. Now, what's interesting about this, I set up a pattern that I call the H pattern, lowercase h. Looks just like this, like that, and a little rally that fails. And if it takes out the left side low, it means one thing. If it takes out the left side low and closes below, that's a very big negative and limits the upside, unless there's a new buy signal that is generated immediately, which we have right here. I'll explain. If it goes under but closes above, it means that it can rally, and it can rally to the left side peak of significance. And if it doesn't touch the left side low bar in that lowercase h pattern in the arch formation, it can go higher than the arch. Well, in this case, it went from 1732.25 in the 120-minute chart to a peak C and then a C minus because it failed. It went under the 1732.25 low. It went to 1732 round number. Even though it's fractionally low, it is lower. Closed above it. That says it could go to the left side peak, and that was 1753.50. It also says that if there's a divergence between the stochastic and the MACD, the slow stochastic is right here. And you can see that when it went to the lower low, there were higher highs in the MACD and the slow stochastic. That's very positive. And that is very bullish. So that said, it could take it out and start a brand new peak A, B, and even a C and a D. We'll be watching to see if there is a D. It's this bar, the very ugly candle of the 3rd of February, that started at 1772 and plunged down to 1748.50. That is the candle that we'll be looking at. So it says that the high that could be established is, it's a little high, but 1772. Well, what we do first of all is we look to see what the 9-period moving average is, that black line in the daily chart. That's at 1766. Our first target will be 1761 to 1763 as very strong resistance. If it takes it out in the next day or so, 1766 could be the next goal, and then we could be looking at higher levels. But you want to go one step at a time, and I just want to show you something else that's very important in my work. And my service here at TFNN is the Tiger Technician's Hour is every single day, straight after Steve's show at 11 o'clock to 12 Eastern Time. I do an hour, a call-in show, just like all the others, a call-in show at 877-927-6648. That's number one. Number two is my service is the opening call. It's a very comprehensive daily newsletter in which I give the parameters for the different key indices. I give the parameters for all the stocks that we're looking at, whether we own them or not, whether we're long or short, the indexes that are very important, like the diamonds, the TLT, the GLD, the SPY, the Qs. Every day in my Trader's Corner, I give at least a synopsis. In the very first paragraph, I give a synopsis of what we're looking at for those who don't have time to look at the many charts that I send, starting from early in the morning till the 8:35 when I send out my opening call, my Trader's Corner from the opening call. So check it out. 2 weeks free. Go to the front page of TFNN. I think you'll find it very valuable, as many subscribers email me and say thank you for guiding us through this myriad of different possibilities. And so let's go through this now very carefully. We're going to go through, I'll just go through the charts as we get them here. The Dow is up 125 at 15,564. It made a trough F, slash B. So this F on the downside, you had a peak F at the top, 6 peaks to the upside at 16,588 on December the 31st. Then it came all the way down, and it came down to yesterday's low of 15,340. Let me just type that in. 15,340. And what happened was, a nice candle, but it didn't take out the previous day's high. The S&P did, the Qs did, the Dow didn't. Now it's making up for it. So the Dow is up 0.81%. The S&P is up 0.72%. Very unusual. We haven't seen that for a while. And you've got the Dow weekly at peak D. That says sell signal to sell mode. This is a counter trend bounce. The monthly chart has not yet even given a sell signal. So that's the way I look at it. And I'll give you the parameters right now. 15,668 is the 9-period exponential moving average. There's a possibility we could get there if we have a good result in the economic reports tomorrow at 8:30. If we don't, I'd say be careful on the downside. I'm going to go through something else. And actually, I'll do it right now because it's so important. The VIX index. The daily has only gone to a peak C. I expect that we will go to a D. You don't have to go to a D in the volatility index because it's a subordinate index. The market is really the leader. But I'm expecting that it does go above 2148 for leg D. I actually was anticipating that there'd be a rally today and that that rally could see tomorrow morning a sudden pullback, very scary pullback, that takes the VIX up to D. And then intraday comes back down, and then next week we actually have quite a nice week. That's kind of the way I'm looking at it. But we'll go one step at a time. Let me show you something else. The TLT, which is the Lehman Brothers 20-year T-bond fund trust, is trading at 106.72. Now 106.80 to 90 was really the support level that I thought it had to hold, because if it didn't, this would say this peak E above the 200-period moving average, giving a sine wave move from the upside of that 200-period, the orange line that if you're looking at Tiger TV, where it says 107.99 right there. We went up, and now we could do a 1-to-1 move from the upside to the downside. That makes the 106.50s very important support to hold. Now, what's also very interesting is that the TLT went under 102.11, the low of August, the week of the 23rd, when it went to 101.17. That starts fresh, the H pattern, and you've got a divergence here, and that says that 200-period moving average in the weekly at 108.96. Let me talk a little slow because I probably have some new people here who are not used to the South African accent, even though I've been here decades and decades. You don't get rid of the accents you've had from childhood. So I'll talk a little bit slower. That 108.96 resistance, where the TLT went to 109.34, I'm watching that real closely. Why? Because the TLT broke down back in May, I think it was, June, the week of the 21st, when it broke underneath that support and went to 108.37. And then you can see how it became resistance. So there's a pattern here that very often turns out to be very bullish. And I'm going to draw it. There are two conflicting patterns. The one is the H pattern. Let me just draw it above here, like that. And then you get your arch and the retest. And the other is the cup formation that forms if there's a successful break above the left side high of the arch. In this case, 108.73. And there has been, not a close, just a break above. 108.73, I think I said, or whatever it is. Now that cup formation has predominance unless or until the 106 level is pierced and the 105s has to be tested again. That to me is really important. Why? Because if it turns this H into an M pattern, and that's part of, maybe during the break I'll show my CD introducing the Chapman wave methodology where I show these patterns. The H goes to an M, a continuous M pattern. That just says limited upside in bonds. The yield is going to remain in a narrow trading range, sideways trading range, so just watch out. Now, this is going to be very important. Why? Let me go through it. The S&P, the SPX held the two support lines, not the major trend support line, but a support line, in the weekly chart when it went to the low yesterday of 1737.92. In this particular instance, that is trough E, if there's no new low bar today, which I doubt whether there'll be, even if I'm anticipating later in the day towards this afternoon, there will be a pullback from the highs, just a kind of a nervous, cautious moment because we do not know what's going to happen tomorrow at 8:30. Now, there are reports about let me just, I had a question here from my email, which I'll answer in the next, in my show, because this person might not be listening now, not anticipating that I'm doing Steve's show. It was about the the Dow holding under 15,390 yesterday. I had said continuously all the way from 10:30, it was actually 10:15 to 11:15, and it did not do that. So we did not get that position. We couldn't get that position because it did not hold. It kept bouncing above it. So I'll go through that in more greater detail. So we've got a leg A here, what I call a gray leg A because it's way under the previous highs. Very nice bounce. Nice turnaround. Not in the MACD yet, but in the stochastic, in the S&P. The level I'm watching is 1773. It's at 1765, up 13 right now. We'll be back. Basil Chapman sitting in for Steve Rhodes. Difficult task, but I'll do my best. I'll be right back. Dow's up 135. S&P's up 13. Be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman here sitting in for Steve Rhodes. Tough position to be in, but that's the way it is. Steve's got a problem with his data feed. I'm sure he'll get it resolved and be right back tomorrow. Now let's just go through this. I want you to look at the S&P parameters, and what I said was 17. It's at 1766 up 14 right now. Dow's up 134. Now what we're looking at, and which is really important for me, is that I am gauging, I'm convinced that we have gone from a sell signal to a sell mode in the daily. That's already done. The weekly chart has gone from a sell signal to a sell mode. We are now in the oversold condition. The volatility index has one little spike to the upside for their D, but if the volatility in the VIX, which is at 1791, at any point goes to the high 19s but trades in the 20s and holds, that's going to be very negative. But at this particular point, there's so many people talking about crashes and this and that, and there just has to be an upside, a relief bounce, and this is what we're seeing right now. This is one of those things that you see in bear phases where you get sudden spikes to the upside, and they're very, very sharp. They just come out of nowhere. They come out when you least expect, well, when most people least expect them. Now, what's really important about this move is there are certain sectors and certain stocks that I do not want to see participate, and so far they are not participating in this particular move. Why? Because they are telling me that the sector rotation is starting to change and that now what we've got to start looking at is how the defensive, not Raytheon and all that, but the defensive, the Procter & Gamble's, etc., how they're going to hold up. Because if they start to rally in the next week, that's going to tell us that the market will probably start down very soon, and that the sector rotation will say that what was great up until December, January, could now turn out to be very weak going into this quarter, and that what were the laggards could be moving higher. That's the rotation I'm looking at. We'll see. Now, what's important for me is that the S&P, the low that was made, and I didn't type it in, 1737. Let me just put 1737s. That was the low of yesterday. At any point in the next week and a half, the next 3 to 7 trading days, if that's taken out, you're looking at key up channel support starting to come into focus, because then you get into what I call the inside track, and that inside track really has a bit of a leeway going up to about 1740 in the S&P. But let me tell you something, a break below would say 1727, the 9-period exponential moving average, and the fast moving average of the MACD in the weekly chart will in fact be a target if that's the case. On the upside, yeah, this could go higher, and in fact, depending on where we close today, and then where we close tomorrow, and where we close on Monday, the next 3 closing sessions are going to just give us a huge amount of information about February, maybe even into March. Now, let's do this, because we have a question about gold. Well, gold stock. Gold, at this particular point, is making, well, there are a couple of patterns that I'm looking at, but you remember what I said in the Chapman Wave methodology? Oh, I forgot to do that. Was that a break? Did we take a break? I'm so busy there. All right, I'll try to do it a little later on. I'll show you the Chapman Wave CD called Introducing the Chapman Wave Methodology, only available at TFNN. It had a high in gold from 114.46 low back on the 31st of January. It went to the 29th of January to 122.51. Let me type that in. Where is it? 122.51, and that made peak D. But there was a sharp pullback below the 9-period moving average, then a pop to the upside. So I have a question, and the question is, in this particular, there, let me draw it. In this particular chart formation, if I do an oval formation right there, is there a chance that you can get the pattern that I call the Chapman Wave stalk leg pattern? And what that says is that long move to the upside from 114 to 122 was leg A, and then you started an oval body. And that oval body says you do not want to take out 119.46, the low of the 31st, because if you do, you're going to make an arch formation curve all the way down, and gold, the GLD, which is trading at 121.06 down 23, will go even lower towards the 118 area. And this pattern here, let me just show you something for 1 second here. Look at this. Oh, there's the break. There. That is the stalk leg formation. Let me just show you as we're going to the break. Right here, for those of you who've never seen it, a long move to the upside made up of a number of legs, then the body, then the neck, the head, whoosh, you come down in the beak. That's where we are in the Dow right now in the weekly chart. I'll be right back. Basil Chapman sitting in for Steve Rhodes. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, and I'm sitting in for Steve Rhodes. Normally I'm doing the next hour, Tiger Technicians Hour, and let's see, the Dow's up 148, S&P's up 15. Now what's really important, we've heard the story about that this is the crash pattern is matching 1929, etc., etc. I see nothing resembling 1929 at this particular point. That's not to say you couldn't have a crash. I just don't see any reason or anything that suggests that. But one of the things that's very important about today's action, it says that if the Dow closes very much higher than yesterday's close, and at this point the Dow's up 150 points, 152 points, the S&P's up 15 points higher, that is, from yesterday's close, it gives a huge amount of leeway if tomorrow's news is very negative. After all, that means that if the news is very negative and the futures plunge, and they plunge 15 points in the S&P, well, all you're doing is you're giving back today's gains. If, in fact, today we close unchanged or just slightly higher, and then you get the futures down 15 points or more, then you're about to tackle the low of the previous day, and that would be very negative. So I see some comfort here in the move to the upside. I also see some comfort at this particular point that certain stocks and sector that I've refocused on in my opening call as being short, not participating or barely participating. At this particular point, the day's young. Anything can happen, not even, it's only 2 hours into the day. So 1 hour into the day. Is that right? 10:30. Oh, yeah, I'm not used to this. 10:30. So what we're looking at is a situation where the rotation allows you to see in a day like this what was oversold enough to have a very strong bounce, what was maybe oversold but is going to remain oversold because there's now no strength in it. It's a sector that's not in favor, etc. This is really important. So I had a question in the den about New Gold Inc. NGD is the symbol. I've got this notated. Let me just show you something here that I think is going to be illustrative of the techniques that I use. In my work, they are called the Chapman wave methodology. You go for the most obvious lowest low bar. In this case, in the monthly chart, the low was 0.74 at, this is December of 2008. And then you merely count each successively higher peak, and it goes to peak A. Peak A is on February at 268, pulls back. That gives you your peak. It's called a floating letter as it's moving up until it makes the peak, and then it's called the peak. And then the moment it surpasses that, in this case, 268 level, that starts leg B, and it goes to leg B, and then it's peak B. Why? Because on this, in June of 2009, it goes to 324, but the following month of July, it has a high of 3. So that makes a peak. Then you go to peak C. But what is it doing? It's getting closer and closer to that golden line, that 200-period exponential moving average. And now look what happens. It goes to a D, and within that D, there's a technique. Oh, I forgot during the break, of course. I'll do it during my show coming up in the next hour. I'll show you the CD introducing the Chapman wave methodology. There's a technique that I use called the instant restart. Oh, it took years and a lot of money to figure out what this was. But what it says, if you can get parallel within 3 bars, if you can break to a new high under certain conditions, with the technical still good, the next leg up is going to be called A, but we call it E/A because you're not sure yet whether it's the old E or a brand new A. But if it becomes a brand new A, what do? You get a brand new A, B, C, D, and very often it can even go to an E and an F. In the second buy mode, it's a very, this one indicator alone can give you a huge heads up into a buy and hold, Rip Van Winkle type buy and hold, if it succeeds. So what does it do? It goes to a second A, B, C, then a peak D high at 14.15 in September of 2011. I was saying too many things at the same time. 14, what did I say? 15. 14.15 was the high. Now it pulls back. But look why it pulled back. It pulled back because the stochastic was starting already to give lower highs. The MACD gave a lower high right there. As the high was the bar before, and that bar was already starting to dip down. The on-balance volume gave a weak signal on that final spike to 14.15. And deep down here, you can see the relative strength made a much lower high than it had way back in when it made peak B at 10.29. So that's December of 2010. What does it do? It plunges. It goes trough A. On the way down, we call them troughs. Trough A, trough B, trough C. Spikes up to an A. That's what I call the right shoulder failure or the H pattern failure right there. Oh, I wish I had my CD all ready to go. Maybe I'll do that during the break. And then it goes D, and it goes to trough E. That was the last trough just made right there. Now the monthly is saying, hey, the MACD is still very weak. The stochastic's trying to move up, but it's flattening out instead of making what I love, the V-shaped pattern, and it's at 8%, not even in the teens. That just shows a lot of weakness. So you have to rely on the shorter term instruments. So we've got a weekly chart now of NGD, New Gold, trading at $5.48, down 29 cents. And what did it do in the weekly chart from the low of the week of the 18th of May? It went from 713 to peak A, B, C, D. Now, folks, there's no cheating. There's no nothing here. All I'm doing is counting each successively higher peak. And I found over the thousands, tens of 500,000 charts at least over the 25 years or so I've been doing this, of peak Ds that tell you be careful. And right there, 1284 September, the week of September the 21st, turns around from peak D and it goes trough A, B, C, D, E. At E is E/A. Remember, that's the failure that we were talking about before. It isn't quite the instant restart on the downside, but it's real close. It starts a brand new buy signal to buy mode, and it goes trough A, trough B, trough C, and then it goes to trough D and a quick trough E. The same way on the upside, when you see a quick peak D to E, you've got to be very careful. So on the downside, quick D to E and a tiny little move from 467 to 468 low bar, and now it's gone to peak B and it's pulling back. Whew, I bet the eyes are glazing over for those of you who've never seen these things before. But that's okay. You'll get used to it. You'll see how often it happens. Now the very unusual peak G. If the MACD, fast-moving average, is moving very sharply to the upside, you can continue the alphabet all the way to G, and then you've got to be careful. So what happened? It went from a trough on the 19th of December at 468. It starts to move. That goes peak A, B, C, D. But then it holds a 9-period moving average going to E, F, G. And now there's the sharpest move from a G as the MACD and stochastic turn down. I suspect NGD, if you're long, I'd be a little careful here. It depends where you're long from. And I just got to see who asked me the question. It was so long ago. Basil, could you look at... Make sure to... Oh, Joe D. Joe, so what we're looking at is NGD is in right now. I've got a sell signal to sell mode in the daily, not the weekly. The weekly is still holding quite well. But my suspicion is that the candle of the 13th of January at 520, it's trading at 547, it has to stop somewhere between 536 and 520. Because if it takes that out, it's going to have the correction is going to say, wow, getting back up there is going to be very tough. So I'm saying to you, if you're long, if you haven't done anything yet, I take a little bit off if it took out today's low, and today's low is $5.40. So 539, I take a little bit off. You can always put it back on. And the other thing is it must hold 520. Now, if it holds very well, it hasn't taken you out, and the 120-minute chart says right at the 200-period moving average where it's at, if there is a bounce from here, that bounce could take it to that candle right there, the low of 555. If it's able to get to 555 or higher, you can say, whew, maybe it's going to hold, because it could make the H pattern with a retest of today's low, and if it's successful, it could just say, hey, I needed a sideways consolidation after such a sharp move, after being smashed to the downside from the 14s all the way down to the 4s. So that's what I'm saying. Be a little careful if it takes out today's low. Got to expect that maybe it could test 520. Under 520, it's a real problem in the weekly chart. So far, it looks like that should hold, but that's what I'm doing just on a shorter-term basis. Hope that helps you. Now, there's a question that I had just right over here. Basil, market closes Monday for President's Day. How do you play this? That doesn't make any difference to my work. I'm only looking at higher peaks and lower troughs. I could be looking at bar charts or candles or whatever you want. It makes absolutely no difference to me. One of the reasons why we wanted to go long in my opening call yesterday, it was the day before. Yeah, day before, we bought the SPXL 300% long at 53. I can't remember what it was. I think it was 53. Something like 53.65, and it actually had a nice gain. Then it pulled back, and then it just took us out. I tightened the stop. I just didn't want to have any risk. I didn't feel it was necessary to have any risk, and unfortunately, we got taken out. And now we're getting it's that same 300% long. The S&P is at 55.70. So it happens. Sometimes stops a little bit too tight. You get taken out. What can I say? But the idea was that there should be a counter trend rally. That the short side that we've got, I'm comfortable with at this particular point. You can never say I'm comfortable. Right at this particular point, I'm a little bit comforted. It's not doing much, but the day is young, as I say. Now, the other thing is, in looking at so that was gold. I want to just quickly get back to the TLT. Remember I said that peak E was 109.34, but look at this, USH14 is a peak F in the daily chart. That's where you're going to be real careful. Now, it could have recycled up in that instant restart, but not with a pullback this deep under the 9 EMA. So I'm just going to put a question mark here. We have no position. I'm just using this as a kind of a benchmark for things. And what I'm saying is, together, this is a peak F. The TLT is at E, but the weekly charts have been very good. If I do the continuous contract, look, continuous contract at US. See, the continuous contract is possibly making the H that goes to an M pattern, but it's the monthly chart that says to me, wow, we are at such a critical level. Look why. If you look at this monthly chart, I've only got, I can squeeze it down. I don't know why I don't have it. I used to, going back to 202. Hey, I've got this thing going back years. Oh, maybe it's on the other chart. Let me just double check. All right, well, take it from my way. It's a 28-year up channel support, and there's that line. This is the continuous contracts. It does get smoothed out. The highs are the highs, and the lows are the lows. The prices change because it gets smoothed out. Look, that peak C held, and in the monthly chart, this is actually A to B. I must double check that. So the low is 127, 126 and 29 seconds, and the last low was 127.23. Yeah, the monthly chart has actually made a little bit of an A to a B. Holding, this is what I call the inside track in the Chapman wave methodology. You see the channel with, everybody draws channels, but I've never seen anyone use this inside track where just a little bit below the upper line, you draw another one about 3/16 or less, and from the bottom you do the same thing. And what happens is the price gets repelled. It's called the repellent zone. And that sell or repellent zone, and what happens, because it's a diagonal line, it's very hard to tell where it is unless you draw it in, because fund managers remember horizontals very well. They'll remember, Apple at 705. You know, they'll remember a number like that, but they won't say Apple at 570 and 630 to 705 as if there was a trend line. It's hard to think that way. So I believe that there is in fact a cogent analysis of why prices jump between channel lines, but what I developed was this line that says that's the buy zone or propellant zone. If it eventually fails, that's very negative, because that becomes resistance, when all the time it was support, and it's been support for 28 years, and resistance. So in this particular instance, at any point in the continuous contract, and it's pretty close to the bonds trading right now. Bonds are 133.02. The continuous contracts are 133 and 5/30 seconds, a point away. So it's close enough for this particular pattern recognition. And what I'm saying is it didn't undercut C to make D. That's number one in the monthly chart. And the other is the stochastic had a nice divergence there. The MACD is still quite negative, so I'm suspecting that bonds are actually going to rally in February into early March, and then we can start heading down. Okay, so that is the break before the final segment. Maybe I'll get a chance to put my CD up. I'll be right back. Dow's up 160. S&P is now caught up. It's up 18. It's surpassing in percentages the Dow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks. We're back, and yes, my show's coming up next. I'm just going to show you this quickly. Look, here in my chapter 17, I think it is, yeah. Chapter 17 shows, you see this red line, how the prices come down. Then there's this little scallop, this little arch formation, takes out the left side low, goes even lower, takes out the left side low, goes even lower. Then sometimes it forms an even greater arch, but then look what happens. Very often you'll see that arch becomes an M, that lowercase h becomes an M pattern. Well, that's what we were looking at just a moment ago. Possibility in bonds and gold as well. I wanted to just show this here because I'm liable to forget. I had a couple of callers looking at coffee, and I said the coffee looks outstanding. It had a spectacular move, broke above the 200-period exponential moving average. I did not know whether to call it E or A because it broke out. It's just really hard. Look, the stochastic at 95%. That's great. And the MACD is still expanding. So coffee, I've got in the 120-minute chart a peak E and says, you know what, you could hang around here, but you're making a high-level consolidation. That is different. And leg D in the weekly chart, but it's broken above the previous resistance around about 140. It's trading at 142.70 right now, down 40 cents. And the monthly chart, for the first time, has made a decisive move above the 9-period exponential moving average after making what I call the Eiffel Tower formation. Now, what we're looking at, let me just use the same patterns and say, wait a minute, UNG broke out. That's United States Natural Gas. There's that pattern of the H's that kept coming down because the monthly chart was looking so good. When callers called in, I said, I think for January, February, I have a target of natural gas in the fives. And look, there it is. It went to the 550 level. It went to the high to yesterday of 5.73. Peak D, and you expect a pullback from peak D. So I'm saying the UNG, natural gas, should have a bit of a pullback. There's a 9-period moving average of 24.63. Leg D in the weekly, I'd say be a little careful here if you've got natural gas. I think it's going to be pulling back. So I wanted to show how these chart patterns repeat over and over. That pattern there is called the drop bucket pattern in the Chapman wave methodology. And all that says is it's a double top formation. Look, here it is. Double top formation. I explain how, why, where, and what you got to look for. There it goes. Double top, and then it pulls back very sharply. So a great show on the skyscraper on the World Trade Center being rebuilt last night on public television. Those guys are unbelievable. Anyway, talking about the drop bucket, the idea of the drop bucket is that the backhoe reaches over, pulls this thing. There's this long arm that goes up, and then the bucket opens up, and plop, the price just falls. Anyway, double top formation. It's like the H, lowercase h, upside down. It's the same principle. Now let's just go through a couple of things for those of you. EPAM. You know what? EPAM, I'll just put it up here. I don't know if I've notated it lately. Yes. It's in leg D up, EPAM, whatever that is EPAM Systems Inc. There's that cup formation, but this time it's broken and closed above the left side of 39.76. I'm calling this E for now, but most importantly, we've got a peak C going to a D and then a very quick E. Remember the technique I was discussing a moment ago? D is going to very quick E. Watch out for a quick pullback, but it hasn't closed yet. Under the 9-period moving average. Oh, it did once. So I'm going to do this. I'm going to put the down arrow because everything about the technicals say that I should do it. It says it could rally higher, but I'd say that 42.39 is the high. If it closes above 42.39, that's very good action, both in the daily and the weekly, and that's going to help the weekly extend leg D. Just be careful. You do not want to see it close under 39.30. Now, before we wrap up, I just wanted to say, Steve, I hope everything works out well for you and you're able to get all your charts back. We miss you here. It's a great show that you always give. Just wanted to quickly say, volatility index. At any point, if the volatility index goes back into the 20s, this market comes down. If it starts to break down, goes to the 16s, that's going to help this market rally into next week. I'll be back in a few minutes for my own show. Stay tuned. In fact, I'll talk about my CD introduced.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.